Hey, good morning, everybody. The stock market is back up. Look at that. We didn't buy enough last week, did we? Just taking a quick look at the market in this AM session. I wanted to put on some more NVIDIA, obviously, with the news this weekend. But I didn't want to buy it on the open because it was pretty crazy. We'll hop in there in a second. So, sector overview, things that are doing well today. We have biotech and innovation, and kind of the middle 5 to 10 are kind of weird between defense, and it's mostly tech driven, but everything's doing well today. Market underperformed junk bonds, long-term treasuries, gold, staples, so it's definitely a risk on type of day. DraftKings signed a deal with ESPN. The writing's on the wall that we're getting national legalized gambling of some sort online. Tesla's back up. I want to start a position in that today. It's at 402, 403. I'd love for it to dip under 400. We can start a position in this account under $400. Fastly's bouncing back. NVIDIA, the deal with ARM. We're about to hop in here and boost that position up. Hoping for it to cool off a little bit. Just looking at the daily. Just looking at this chart. On the news we opened up. So hoping that this sells off a little bit. We don't want it to break down much more past 510. I just released a podcast breaking down this whole transaction. This is one we have a close eye on. But we want to get in there. I think that's a great deal that they made. Adobe has earnings coming up tomorrow. Not great action. There's so much priced into these that, there could be negative earnings and it could test down to 460, no problem. Any of these stocks, if they sell off, we're buying and we're adding. That's why we're holding a little bit more cash than we normally would. Usual suspects in the middle. Sherwin-Williams just chugging away. Excuse me. A little hoarse. The wildfires and all the crazy smoke in my area. Unrelenting, but getting through it. All right. What do you guys want to buy today? Looking at the Russell 1000 real quick, it's definitely a biotech day. There's a lot of biotech names that are up double digits. One company is up 100%. Immunomedics, ticker IMMU. Shout out to you if you held that. Yeah, you owned it yesterday at 40 and today it's 84. Crazy. I would sell that so fast. All right. All right, so been putting the portfolio on bit by bit, and we're kind of out of balance of where I want to be. I want NVIDIA to be at the top, and I'm fine with Amazon being up there. Obviously, we don't have fractional shares in this account, so we're a little bit outsized on Amazon. But ultimately, the NVIDIA position is going to be $5,000-6,000. So we're just going to build that up. Let's start at the bottom. This bid is crazy. Let's just get in there. We'll hold off on Adobe. DocuSign's big enough for now. Let's just go share by share. We have free trades. We don't have to rush. And just build as we go. Let's just start building our position in here. And if we get a dip, we'll be timely. All right, that's a bit more how I want this to be balanced out. All right, and then on any weakness today, I'm going to add a little bit more NVIDIA Square Tesla. I'm okay with these other positions down here. All right, so we're a little under 14,000 invested. Let's get that to about 20K today. Let's add some housing. This is a regional home builder that I really like. A little smaller on that to start. We might be able to get a better price. And again, the benefit of having no trading fees is we can go small and build bit by bit. There's no reason to rush. Okay, you guys see the cancel Netflix outrage this weekend? I mean, whoever decided to produce that show, it's foul. And I don't know why they ever did that, but I mean, Netflix is going to be okay. Come on. People have the attention span of, I mean, I don't know, nothing. They'll move on. The amount of data that Netflix has on our viewing habits is just insane. I love it as a big data trend. We'll get a little Netflix going in this account. Maybe we'll get lucky and Lulu will give us a nice sell-off that we can hop in. All right, so we're getting a little portfolio. Individual stocks, obviously, we're not very diversified because we're yeah, all tech. Amazon, Apple, Nvidia, Square, Tesla, all high tech. Dexcom is a diabetes company, but it's still a technology company. PayPal, DocuSign, Adobe, all productivity companies and payments. Um, Netflix, I would be fine being higher in Netflix. There's a lot of really smart people that hold really concentrated positions of Amazon and Netflix based on their data and their management. Netflix is such a well managed company, except for this cuties fiasco. I mean, somebody needs to get fired over that. But the management at Netflix otherwise has been awesome. So I think it's worth staying with them. And we're up $1 for our good faith. We'll see how that works out. Um, let's let this market chill for a little bit. I'll hop back on with an afternoon session and maybe another morning session. But I'll get this up, and if there's any stocks out that you guys like, I mean, there's a lot of stuff that's going on with Nikola, and that's why I don't like to own that. I like to own high quality, and I'll pay up for it. I mean, I get that I buy a lot of growth and a lot of names that are hard to value, but I want quality. I want the best of the best. I want to wake up on Saturday, Sunday mornings and see Nvidia's buying a company from a position of strength. I love that. You don't get that when, I mean, even owning AMD, it's just, I want to own the big American-based companies that are going to continue to export our technology. I think that's what the political environment's going to set up for, and I think that's what the real world is going to set up for. So we're going to stay with this skew, and we're going to ride the equity market. I think stocks are still great. I just don't really like a lot of the value stocks because, you know, they're just underperforming, and you give up a lot by not owning what you really want to own. I mean, real estate, booming. Let's go. For those of you who don't know, I also own a real estate company, so I love to see real estate and the builders doing well. And then IT, that's right where we're at. So we'll need to expand some healthcare too in this portfolio. The rest of these sectors, though, I'm not bullish on. I don't want to get into communication services. We own Tesla. Tesla by proxy with Starlink and Neuralink, they have a lot of crossover there. I think ultimately Tesla becomes a communications company. I'd rather play it that way than own a Verizon or some of these other companies. So this TD platform, I think, is pretty nice to see a simple snapshot of just kind of how everything's moving. Take one last look at our sectors and see how things are doing. IBB is an ETF for biotech. It's a risky business. This is the number one ETF where they'll say, avoid individual stock risk and buy the whole sector. And, I mean, it's okay. It's good, not great. I mean, I'd rather take the stability of these high-tech companies that are just printing cash versus there's too much gambling going on in this biotech market. Everybody's just trying to get a cure for COVID, and that whole thing, I don't even want to be adjacent to it. XAR, this is another one. It has this chart pattern right here is pretty typical for a lot of middling S&P type of stocks from Corona, recovery, retracement, and then kind of this like consolidation. We're going to start getting to some make or break ticks here in these charts that are coming up. So XAR is more aerospace driven and has more of, obviously, Virgin and some other things. Don't get me wrong, they make drones, they make missiles, they make, these are war companies. But ITA is definitely more defense skewed. So if this is an industry that's interesting to you, these are two options that you can use to get in there. But again, you think they'd be better given the environment and how much we spend on the military, but they haven't been great investments. And we'll see. I think you can just avoid so much of this by just owning really high quality tech. ARK Innovation, this is a great ETF if you want some managed money, if you just don't want to pick individual stocks. This is managed by Kathy Wood. I think she's the best investor on the planet. I love that she's kind of weird. She's not a salesperson. She doesn't know how to sell. She knows how to think. She's great at putting multiple things together, and she's great at picking great talent to run her funds and to be analysts on her funds. But she's not like the typical stock market money manager where they're just like talking their book and selling a weird product. She is very thoughtful, and everything that's in here is in here for a reason. So if you want to look at, if you ever want to find ideas for individual companies, ARK K, ARK W, ARK G, ARK F, they're all managed. They have a little bit higher expense ratio. 0.75, that means it's $75 per $1,000 you have invested per year. But the return has been excellent. It's been excellent. So Kathy was calling $2,000 Tesla when it was $150, and she just got roasted by all of Wall Street. They said she's out of her mind. Laughing all the way to the bank now. My girl Kathy. I really trust her as somebody that some of my family, they don't like to pick individual stocks, and they just want to have their money invested in the market somewhere where they know somebody thoughtful is taking care of it. And when it comes to your money, trust is so important. I think what they're doing at ARK is just such a high credibility operation that I have a lot of trust in what they do. So I don't own ETFs. If I do, I almost always own these ARK funds. So just putting that on your radar. Some people love ETFs, and they're a great way to invest. And I wouldn't even let the expense ratios really bother you if the performance is there, which it has been. But even just looking at the top 10 holdings, you can get a really great snapshot of what's been working well in the economy, and then you can go and buy these individual stocks if you want. It's kind of a backdoor way to find new stocks and get stuff on your radar. So ARK Invest, they have one of the things, on Twitter and Instagram, all their analysts are really transparent, so you can see the articles that they post. You can tell they're just like super intelligent people that are really committed to their individual fields. And one of the things Kathy's great about is these funds are intentional, and the analysts are in their lane. They might not be great at other things, but what they're doing in these fields, they really know their stuff, and they're really highly educated in it. So again, I don't make any money from ARK Invest. I could sell this stuff all day. I think that they're great at what they're doing. So just to put that on your radar. One last check on these markets before we sign off. Make sure we don't have to do anything. Yeah. Let's let this cool off, and then we'll hop back in and buy some more stocks later on today. Have a good day, everybody.